Now, as I mentioned at the top of the program, of course, the Reserve Bank has cut rates by 25 basis points, as was expected. A little earlier, I caught up with Shadow Treasurer Angus Taylor, asked him whether he welcomed the news.
Well, it's welcome relief for long-suffering households and businesses who have been paying elevated interest rates, of course, and we've seen 12 interest rate increases under Labor. This is one cut. It's welcome relief, but it's a long journey back, Chris, to the standard of living we had before all of this began, before Labor came to power. 12 interest rate increases, as I've said, big increases in prices, almost 20% now for hard-working families across Australia, the increases in prices they're seeing. And importantly, we've seen in the updated forecast from the Reserve Bank today a downgrade in their expectation of Australian standard of living in the coming years. We were already on a pathway where it was going to take till 2030 under the government's plan to get back to the standard of living Australians had when Labor came to power. Further downgrades, this is a long way back and there's a long way to go before we see a restoration of our standard of living in this country.
I want to come back to that long road back, but firstly I want to talk about the Reserve Bank's decision and its rationale here. Is this decision in keeping with the plan that the Reserve Bank has laid out up until now, up until most recently, of course, their December decision to leave rates where they were? I mean, Michelle Bullock always said she wanted to see underlying inflation within the target band. Well, it's not there yet. We haven't got those figures. She's reducing rates based on forecasts that it will get there in the next few months.
Yeah, I'm not going to become a commentator on Reserve Bank decisions, Chris, but what I will say is this, that their updated forecasts tell us that they are very, very bearish on economic growth. They think it's soft, and the key to that is households have tightened their belts, but importantly, governments haven't. So it's households who have done the work here to get interest rates down, not the government. Not any government. Governments are growing their spending at a rapid rate. Of course, the Labor state governments and the federal government, rapid growth in spending, the highest level of government spending per dollar of GDP that we've seen. And the result of that is that households have had to do the hard work here. And, you know, Jim Chalmers will declare victory whenever there's a positive as far as he's concerned, but there's a long way to go here and households have had to pay a high price for this. It's welcome relief, but we want to see an accelerated pathway back to the standard of living that we had when Labor came to power, and that does mean governments have got to contain their spending.
Well, there's no doubt about that, and everybody can see that relief and welcome that relief, but there is a long road back. But when it comes to the RBA sticking to their plan, there is a risk, isn't there, that if they've cut too early, then inflation could persist longer. Indeed, it could even tick up again, necessitating another interest rate rise. This, incredibly, is something that the Reserve Bank Governor, Michelle Bullock, has actually countenanced in her press conference today.
Yeah, no, it's exactly right. And we've seen exactly those circumstances in the United States, where we're seeing strengthening of inflation, a resurgence of inflation. Of course, the Fed there has held. It's not cutting rates as a result. And the Reserve Bank Governor, as you rightly just pointed out in her press conference after releasing the decision, has made the point that there's still a long way to go here, and the risks of ongoing inflation and indeed strengthened inflation are still very high. So this is far from over. The important point here is we're talking here about inflation. Prices aren't going down. There's no scenario under which prices are going down, and that's why it's such a long pathway back for Australian households to where they were only 2.5 years ago. Australians are poorer than they were 2.5 years ago, and we can't afford another term of government like the one we've just seen.
All right, there's no doubt that this is going to put some wind into the sails of Labor. There's no doubt we're headed to election sometime soon. My tip would be early April. What can you do if you win power to bring down inflation permanently and to boost productivity and get our standard of living increasing again instead of going backwards?
Yeah, exactly right. We've got to accelerate that journey back to where we were when Labor came to power, Chris. And that is the core imperative of a new government, and that does mean beating inflation sustainably. That means getting rid of government waste, making sure that government isn't spending if it doesn't need to. Adding 36,000 Canberra-based bureaucrats is not the way to beat inflation. Labor's been building bureaucracies, not building businesses. We want to see the private sector investing, and that's why we're supporting small businesses with tax cuts, incenting them to get out and invest, ensuring they have the cash flow they need to create the jobs and the opportunities for all Australians, making sure that we've got affordable housing, beating those infrastructure bottlenecks that are stopping housing supply from growing at the pace it should be, getting the balance right between immigration and housing supply, and making sure we've got affordable, reliable energy in this country, which means having enough supply coming on. Gas, natural gas is crucial in the coming years and longer term, opening up to nuclear baseload power. I mean, these are the initiatives. It's all supply side, good back to basic stuff. We know good economic management is the way to beat a cost of living crisis, Chris. Good economic management is the way to beat a cost of living crisis, and Labor can't manage the economy.
Angus Taylor, thanks so much for joining us.
Good on you.